Taking a look at today's interest rate markets, let's check in on the 10-year note futures today as they're having a nice move higher here today. We're seeing yields coming down quite substantially, and the 10-year note now pushing up to basically 6 session highs or a week and a half highs. 131.23 on the front month future, the most active future when you look at the 10-year note futures. And I think a couple of reasons why we're seeing this renewed strength today. I don't think you have to look too much further than the Fed. The Fed message continues to be very consistent the last few days. A lot of Fed officials speaking at various engagements and still indicating that they are very pleased with the current trends that they are seeing in the data points, which are coming in probably stronger than what most expected. Yet it doesn't shift their view of where rates should be. And again, their policy, they're standing very steady on their policy and indicating that they still haven't seen enough here with the positive data points that would shift their current rate policy, which is basically indicating they're going to stand pat for quite some time. So the market does appear possibly to be adjusting for that. We're seeing the currency market shifting. We're seeing a rotation, I think, taking place to some degree as we move into Q2 as well. So I think those factors are all playing into it. But really, I think it's the solidarity of the Fed message continuing to be very strong in the fact that they're going to stand pat for the extended period and have not wavered at all with the recent data points. Now, looking at the yields, 10-year, 165 basis points, so getting back down towards the low end of the recent range. And honestly, when you look at the longer durations, the 30-year is actually pushing down just off of the 2-week low, which is right around 232 basis points is where it's trading. 229 basis points was at low, but I think a lot of market observers are watching the back end of the curve here. And we are seeing the yield curve shifting lower across the board today. We're seeing a 1-year all the way out to the 30-year Treasury instruments, futures markets, all trading higher and therefore pushing yields lower today.